Sure, Hemant. Thank you for the lovely introduction. Let me share my slides, okay? If that is
I
okay.
think I have already shared my screen.
I made some, few last minute adjustment. So,
Okay,
so if
okay,
if
wonderful.
that's
No
okay.
problem. Sure,
Okay.
sure, sure, sure. Yeah, you can share your screen. Yeah. So, team, to let you know, Kiran is a CAMS and CAMS audit certified. So, which means we are very privileged, to have him into this workshop.
Okay. Thanks again, Hemant, and good afternoon to good morning to every one of you. So, as Hemant said, my name is Kiran Kumar Shah. I am CAM certified, and also I have done CAMS audit, that is advanced CAM certification. So, am I audible? And
Yes, Kiran, you're
yeah,
audible.
okay. So, previously I worked I have a 15 years of commercial experience in commercial banking in Nepal. So previously I worked in one commercial bank as in the position of head MLCFT. So I worked for around let's say 7 years, and after that I left my job and I started my own thing, right? So currently I have established a company that is Theory Consultancy, and through that company I'm providing AML safety training. And actually this mastering AML safety transaction monitoring is actually a part from my online live classes, where I teach students and candidates about uh, how to make their transaction monitoring system effective in their organization, okay, to help them identify more suspicious transaction and reduce AML safety risk. So without further ado, let's start. Okay. So by now I hope you are already in the field in AML safety, right? And you have been working for let's say 1 or 2 years. So you know what transaction monitoring is all about, right? So just to give you a introduction, so what is a transaction monitoring? Like, so when there is a knock at door, right? Knock at your door. So you don't just open that door, right? You see from your from the peephole and verify if the other person is standing behind that door is familiar or not, right? And if that person is familiar, then you let him in, right? So in a sense, in a similar sense, in transaction monitoring, what we are doing is we are verifying customer transaction, right? We are looking at overall transaction of the customer. Let's say their cash transaction, deposit transaction, remittance transaction, whatever, to to identify whether those transactions are suspicious or not. So why we are doing that? Because to ensure that customer we are dealing with are trusted party or not, right? They are doing the transaction as per their KYC profile. So if let's say if the customer is not doing any transaction which is not as per his customer profile or expected transaction pattern, we will find or will file suspicious transaction report, right? So that is clear. So there are problem with transaction monitoring system. So these are the common problems that we AML safety professional face during our job, right? So the first problem is almost 90% are false positive, right? If you can relate to this problem, then you can we can discuss this in further q and q and Q&A session at the end of this session. So the most problem the AML analyst or money laundering reporting officer or compliance head are facing is that 90% of the alerts are usually false positive. Okay, the STR to alert ratio is very low, and more than 60 minutes is spent investigating a single alert. So yeah, it's a investing alert is a time consuming process. Okay, you need to obtain a lot of information from about the customer, uh, and if you don't have a digitization system placed in your financial institution, you need to collect that. You need to personally contact with that staff and collect those information, right? And third one is it is failure to detect complex AML cases, right? So mostly, the in many organizations they create few scenarios based on certain transaction, let's say cash or let's say remittance and so on. But since criminals are are very smart, right? They know about the rules and regulation of banks, and they almost know what are the threshold or what are the triggering points, okay, to raise that red flags. So and they kind of get this information knowledge, and they try to devise various complex ways of conducting money laundering and terrorism financing activities, right? Now most of criminals have moved to crypto. Why? Because crypto is difficult to identify. So that's how they are changing pattern, and our existing transaction monitoring system is not that complex enough to identify those transactions. And rule based scenario, right? And rule based scenario is like a very prehistoric method, right? We create certain scenarios, right, based on a certain threshold, right? We apply threshold, and sometimes when we apply threshold for the scenario, that is itself not based on a certain statistical tool, or let's say certain systematic process. So most of the threshold are set by us on the basis of our judgment, and that is inappropriate, right? Because of that we miss a lot of true positives, or let's say actual cases of money laundering and terrorism financing. A lack of proper information while making decision. Okay, so we are looking only while investigating alert, we are only looking at one part of transaction, right? We are not getting all the information. So for that we need to have a 360-degree view of customer information and all the transaction performed by him, and only then we can decide whether this transaction is suspicious or not, right? So there are some condition to to develop a effective transaction monitoring system in your organization. So first one is transaction monitoring should be always linked with KYC or customer due diligence. The more better you are at doing customer due diligence or customer risk profiling, uh, the more effective will be your transaction monitoring system. So, can anybody, just tell me what is the link between customer risk profiling and transaction monitoring? You can also, message in the chat, or you can just unmute yourself and give your thoughts about it.
Hi, Kiran. Risk profiling is done that what kind of business is customer is going to business relationship going to have,
Okay.
and where he is residing. There are lot many factors considered while doing risk profiling. On that basis, their transactions are monitored in the organization. Say geographical location, their profession, kind of
Right.
business they are doing, kind of customer they are onboarding to the business, kind of the threshold they will be using, kind of amount will credit will be coming, how many credits in a day or in a month will be coming, what will be threshold of day or a month. These are
Right.
considered. So this profiling is done on that basis, and then on that basis we decide our systems rules that this customer will have this
Right.
kind, this much threshold, and then we can monitor the transaction.
Right.
Thank you.
So yeah, thank you, Ratna. So in a simple word, in a simple words, risk profiling determines the intensity of transaction monitoring. Right. So for high risk customer, you will monitor his or her transaction more frequently. Right. And you derive customer profile risk profile based on the customer KYC information, as Ratna have correctly said, on the basis of that customer occupation and other information, identification detail, right? We derive the certain risk profile of that customer, and that risk profile then determines the intensity of transaction monitoring. And that is the main spirit behind risk based transaction monitoring, right? So, for those customer or transaction which are, let's say, in a high risk nature, right, which are very high risk, you have to monitor their transaction more frequently to identify whether they are suspicious or not. So, you have to always remember that transaction monitoring is linked with customer due diligence or KYC information of the customer. So, in fact, the anti-money laundering, the main two pillars of anti-money laundering are: one is KYC, another is KYC or CDD, and another is transaction monitoring. So, if you have these two mechanisms very strong in your organization, then AML safety risk, sorry, or money laundering and terrorism financing risk in your organization will be low, right? And so these three points are quite related to one another. So we'll move towards fourth point. So you have to have a proper transaction profile. So what does the transaction profile means? It means that you need to have a proper information regarding the transaction done by the customer. Okay. For example, what is that customer beneficiary party information, where he's sending the money, the bank, the name of the bank account number, right? So name of the actual beneficiaries, okay, ultimate beneficial owners, purpose of fund, so source of fund, and in certain cases you need to obtain supporting documents of transaction also, right? And this gives you the clear picture of the transaction. Okay. And when you have all this information for all the transaction done by the customer, then you have a, let's say, the full view, let's say you have a complete transaction profile or 360 view of whole transaction performed by that customer. And when you match that customer transaction with his customer due diligence, there should be a match. Okay. If it doesn't match, then you file suspicious transaction or suspicious activity report, right? And is another important component of transaction monitoring is to determine the expected transaction of customer for identifying usual transaction. So you have to determine expected transaction of a customer, and this is done on the basis of his customer profile. Let's say if I'm earning around 10 lakhs per annum, then my whole transaction, net transaction for 1 year will be around 10 lakhs. Okay, so that will be the my expected transaction. But let's say suddenly I am doing transaction around 1 million or 1 billion. Now that becomes suspicious because my actual transaction does not match with my expected transaction pattern. So in that case, you need to ask, you need to inquire customer, why is such discrepancies. Okay, maybe that may be like maybe because of genuine reason, or maybe there might be something fishy going on. So let's say if I have suddenly turned out to be a successful entrepreneur, then it makes sense. Okay, maybe I am earning that much of amount. So in that case, now previously my KYC said that I was only a student. Now as a as a concerned staff from your financial institution, you need to update my KYC, right? You need to ask me to update my occupation, and in similarly I need to update my annual income also. Now after that, so we call it KYC review, right? The KYC review should be done in a certain period. So after doing KYC review, now my expected transaction will match to actual transaction, right? So but if I am not able to explain the reason or source and purpose for my actual transaction, then you need to file suspicious transaction report. So to determine whether you need to you need to perform KYC review or file suspicious transaction report against that customer, you need to have a clear idea regarding the expected transaction pattern of that customer. Okay, so let me just show you
Uh,
this one video. So yeah, I have my own YouTube channel. So here, see, I develop. So I have created this application using a machine learning algorithm. So just if you can look at this. So in this, this is a like a online account opening form. So you enter different information about customer. Let's say customer occupation, his risk rating, annual income, and annual transaction, right? And when you click on submit, it will generate that customer expected transaction, right? Okay, and this is what we call customer segmentation. Okay, so for transaction monitoring, to have a very effective transaction monitoring, you need to segment customer based on their similar attributes, whether it may be their occupation, annual income, and whatever the information you have. Okay, so you have to group that customer into various segment, and you need to develop transaction monitoring scenario for each segment. Okay, so let's say in a high risk customer segment, we have a different high risk category customers. Let's say pay, jewelry business, cash intensive business. So the customer principle of customer segmentation says that you need to group this customer on the basis of their attributes. Okay, so for a pep, you need to have a different scenarios. Okay, which might be different from uh, your jewelry business or cash intensive business. So if you are able to segment the customer into various bucket and identify their expected transaction and develop scenarios accordingly, the false positive rate will reduce drastically. So these are the things I teach my students in my online classes. So, and the fifth one is there should be good cooperation between various departments. So, as a compliance head or AML safety head, you need to have a good internal person relationship with other department also, because you are like a liaison department. Okay, so because you need to collect lot of information from various departments, from let's say frontline offices, right? From let's say other departments, you need all those information, and to collect those information, if you have a good relationship with all those departments, right, they will provide you the information as quickly as possible, and this will reduce the time taken for financial investigation. Okay, so yeah, so these are the few things that you need to consider while developing a good transaction monitoring system.
Can I add one point here? Uh,
Sure, sure.
it could be possible you have maybe next slide, but I just wonder, because talking about this transaction monitoring system, so you have covered most of the point like CDD, KYC profiling, and all that, but also proper coordination. So, and I think there's one more point which could be you have covered in next slide, that it is that what about the thresholds? I mean, the
Yeah.
parameter. Yeah.
Yeah, see, so this is only for 30 minutes, right? So I think
Okay.
like Hemant, we are trying to do
Yeah.
like a
So,
full.
Kiran, let me add this. So, team, this is a workshop where we are trying to understand the challenges and know a few basics of transaction monitoring, and also we have a end-to-end training for transaction monitoring that is led by Kiran and by myself, so that we will discuss about all those details at the end of the session. So here the
Okay.
workshop means is only to interact, networking, and to try to understand, learn from each one of us what is transaction monitoring and what are the key concepts around transaction monitoring. How does transaction monitoring is going on around all global financial institutions. So this is the key motivation and objective to understand all this on everything around transaction monitoring. Yeah.
No worries. Thank you.
Okay.
Please go ahead, Kiran. Thank you.
Yeah, sure. Okay. So capability maturity model. So it's a framework, and it is used by organization to improve their process, right? And it doesn't apply in a only in AML safety area. It is actually been used in cybersecurity area. So I have borrowed that concept here. So you can apply this capability maturity model to improve any function or process in your organization. Okay, and when you are seeing this step 1, 2, 3, 4, 5, right? These are the different steps or level of process maturity. Okay, so you move from one step to another. So okay, so by looking at this, okay, you can determine how effective is your transaction monitoring. Okay, so let me try to explain this concept. So for example, mm, let's say you are baking a cake, right? So on the first stage, when you are trying, you are just trying without any recipe. Let's assume that. So what will be the condition during that process? The process are unpredictable. Okay, that means that either your cake will turn out to be good or bad. Okay, and it's poorly controlled because you will be making mess in your kitchen, right? And it is often chaotic. Okay, you are in a lot of pressure. Okay, now in step 2, let's say you have a now recipe. So recipe is a kind of a process, right? So now the process are documented, standardized, because you have a recipe. It tells you the step by instruction for baking cake, and now the outcome is more predictable and controlled, right? And mm, step 3 is defined, meaning you are now following recipe for baking cake, right? So the process are well defined here, and it is, so now you have developed a recipe, and it can be followed by your relatives also, right? They can also make cake on the basis of that recipe. So the process are well defined, and it is understood across the organization. And in a fourth stage, okay, here you can say that in your recipe you have now identified each ingredients and their quantity. Okay, so the result will be the result for having such the quantitative method is that your results will be consistent, right? Each in every time you will bake a consistent cake. Okay, that will taste same, that will smell same, right? So the process are measured and controlled using the statistical and other quantitative techniques, right? And fifth stage, you are optimizing. This means that now you are trying different flavors of cake, let's say vanilla, chocolate, and so on. So it means that you are continuously improving your process, right? So now how we can use this, let's how we can relate this analogy to our transaction monitoring process. And by relating to this to our transaction monitoring process, you can identify where your transaction monitoring process is at. Okay, at which level. Okay, so in initial stage, okay, many let's say at the initial stage, many organizations don't have a transaction monitoring policy and procedure, okay, and transaction monitoring system is not risk based or developed as per organization need, and there is no clear roles and responsibility divided between first line, second line, and third line defense. In second stage, okay, now it is little bit managed. So in this stage, the scenarios are developed and they are very general, okay, they don't lack depth, meaning you don't have a customer segmentation, you just have a few scenarios which monitor like overall transaction of the customer, or maybe few transaction of the customers, okay, and the transaction monitoring does not match with the organization risk profile, okay, you don't know you so in this stage you still have not performed AML safety risk assessment of your organization, and the alert processing and notification process are capacity driven than risk based. So if you have a few staffs, so you are only reviewing few alerts, and if you have a more staff, you are reviewing more alerts, but still the transaction monitoring is not risk based, right? And there is and management is not informed frequently about progress of transaction monitoring, okay, how much there are uh, false positive or total number of alerts, how much you have filed STR, so there are no such information provided to senior management, and the training is incidental, okay, you just providing training for the sake of training, it does, and the content of the training lacks quality, right? Now you move to defined phase. So in this phase, customer risk profiles are properly developed, right? And transaction monitoring sufficiently matches with organization risk profile, okay? And so many unusual transactions are being captured. Policy and procedure are sufficiently defined, and there is also second line monitoring and independent control. So as a compliance head, we'll review the different transaction monitoring scenarios on a time to time basis, okay, and even you have an internal audit team which separately review transaction monitoring system, and the training are done in a high frequency, and the content is qualitative, right? And fourth one is qualitative management. Okay, the transition monitoring is incorporated in all function and organization, and effectiveness is measured. So meaning you have developed different KPIs to monitor effectiveness of transaction monitoring. So one KPI may be a number of time taken by staff to review that alerts, or another KPI is number of STR to total number of alerts. So if that ratio is high, it means that you are the false positive rates is low, right? So you are filing more alerts as a suspicious transaction report. And fifth one is optimizing, okay? So here organization is more proactive towards developing money laundering and terrorism financing scenarios, okay, so the management, or let's say compliance head, has a reading habit. They always go through let's say different news articles or FATF typologies to identify new money laundering and terrorism financing trade, and they develop scenarios accordingly, right? uh, so all employees and senior management are aware about AML safety. They know the value of transaction monitoring system, and they themselves report suspicious transaction report to compliance department. And there is a obligatory and optional training on AML safety. Okay, maybe done on a monthly, maybe done on a weekly basis, and there is an active cooperation between financial institution and regulatory bodies. Okay, so whenever any kind of critical STR arises, the financial institution, without uh, without waiting for to file STR report, they will directly contact with financial intelligence unit, and there is also feedback, and they also receive feedback frequently from financial intelligence unit. Okay, so in this way you move from different stages till you optimize your transaction monitoring system. So if you are interested, right, so this is this one is an article. Okay, you can also go through it, go through here. I have explained everything about the this capability maturity model and how it is applied in a transaction monitoring arena. So I'll share the link right in the chat section, and you can, when you have time, you can go through it. Okay. Okay. So yeah, let's move on to our next topic. So these are this is the current process of developing transaction monitoring scenarios. Okay. So okay, I don't know how much you can relate to this. Okay, relate to this example that I am saying, that I will be saying. So in Nepal, we have an initial public offering. Okay, and so there are hydropower companies. Okay, they offer public share through IPO, and so during IPO, it costs around one, let's say 100 rupees, right? And these shares will be listed maybe after 3 years in a stock exchange, and during that their value will be around 1,000 to 2,000. Okay, depending upon hydropower company's capacity. Okay, so what people usually do is they actually open accounts in various person name. Okay, and they provide certain money or incentives, or maybe they are their relatives. Okay, and from this account they apply different uh, they apply shares that are available through these IPOs, right? And they get this share, and after 3 years they collect this share from different those peoples and sell them in a stock exchange. Okay, in secondary market. So in a sense these are all dummy accounts, right? And what is the problem with this scenario from AML safety perspective? As a AML or as a compliance aid, why should you be concerned in this case? Can you anybody can have a can anybody put their thought in this matter? I hope everybody understood the scenario, right? So just to just to okay, please just answer this. Is this concern to us, to AML safety professional, if this thing is happening in your financial institution? Yes or no?
Yes, definitely it's a concern.
Right. Okay. So why it is a concern?
I mean, there was a possibility of identifying the sources of funds. I mean, where the funds are coming.
So there is no actual problem with the source of fund because the funds are legitimate. Okay, because that person will be giving a legitimate money. Let's say, for example, for this scenario. So what is the another concern? What is the main concern? It's not about a source of money or purpose of transaction. There is another important piece of puzzle we are missing here. Okay, because in this case the ultimate beneficiary owner is hidden. Okay, so all those accounts are being operated under the or as per the instruction of a single person, right? So all these accounts are dummy accounts. So in a sense that the ultimate beneficial owner is hidden in these accounts, and our regulation or FATF standard says that while opening any account we need to identify actual beneficial owner. Okay, and this is the reason why we should be concerned. And let's say in a step one, you came to know about this through, let's say, from news media, or let's say from your colleague and so on. Okay, and now in second stage what you will do is you will ask with your frontline staffs, or let's say with your one staff, and or maybe look at STRs, right, to identify whether such kind of typologies exist in your organization or not, right? And let's say in step 3, if you find that such kind of transaction exists, or such kind of money laundering, let's say such kind of discrepancy is happening in your organization, then you identify specific features of that transaction. Okay, so specific features means what are the common factors to identify such kind of activities in your organization. So if you look at these accounts, so this actually happened in our institution. So when we looked at all these uh, accounts, we found only one common thing, that was mobile number, right? So for all, let's say if there are 16 accounts or 10 accounts open under the instruction of one single person, let's say Mr. Ram, then for in these accounts the Mr. Ram mobile number was given, right, so that he would receive information about the transaction done in that accounts, right? So, the common factor for identifying such accounts is now has it is a mobile number. So, step 4, you will develop a scenario, okay, to identify such kind of accounts. Okay, so the scenario can be, for example, generate alert or give me the list of those accounts whose whose mobile number is same, okay, or which have a same mobile number. So on the basis of common mobile number, we'll create a scenarios, and it will start generating alerts, okay, and identifying those accounts. So in this way, we develop a scenario and implement in our transaction monitoring system, and this process gets repeated. Okay, and this is how the many organizations are creating various scenarios for their transaction monitoring system, right? uh See, and this is a very old approach. Okay, I'm not saying that this is not effective, this is effective, but again the false positive is very high in such scenario. Okay, so there are few new approaches for transaction monitoring. Okay, so I will cover only few of them. One is data visualization. Okay, uh, Hemant, how much time we have left?
I think we are already overlapping with the time, Kiran. So, team,
Okay.
so we have covered, I think, many topics on the transaction monitoring. So we also have, let us start, since Kiran, I think we should stop here. What do you suggest? Because,
Yeah,
because it's more than 40 minutes
yeah.
now. So,
It was an introductory session,
yeah,
right?
yeah, I
And
understand.
and
And
I went with the flow. I
yeah,
didn't.
I understand. I
Yeah.
understand. Being a trainer, I do understand that. And so, team, so let me share my screen. Kiran, if you allow me to share my
Yeah,
screen.
sure, sure.
So, team, let me know if you have any questions, and just stay. At the end of the session, so I will collect all the all your full names and your email address so that I can send you this certificate of participation. So here we have tailored a new course on transaction monitoring. So I hope you can view my screen, and this course, will tell you it's a 4 hours, training session led by Kiran. You will just go through what transaction monitoring, what are the regulatory frameworks related to transaction monitoring systems. Just Kiran was sharing with you a few examples like what is it is rule-based approach, or how it should be added into the nowadays. You have various types of transactions such as crypto. You have any other type of transaction, how the how it should be detected and what is the work around. We will show you a few example as well, and we will share you how you need to write a SAR narrative as well. All those things in this 4 hours workshop. So if you are interested, please go through this link, and I will share this link with you over the email and as well in the group chat as well. So we are organizing this workshop on August 4th. So the timings I will come back to you, but it will be on 4th, and 4 hours of training. So it will be a very good approach since you now know how we have trainers, and we also have few other trainers as well. So this transaction monitoring training will be led by Kiran and by myself, and you have two CAMS, like Kiran is already a CAMS and CAMS audit certified, and I have around 13 years of experience in AML as well. So you will have this practical approach training, and this is supported by Kiran's firm, which is Zurich Consultancy Private Limited. So let me know if you are interested, or if you have any questions, you can just reach out to us. And meanwhile, let me know if you have any questions. Me and Kiran are there uh, to address any concerns or any questions. And if you want to, you might have some questions like, I have experience in KYC and I want to switch to transaction monitoring, how it is, how does it work? So all those queries, we will work it out here. And now you can start, from 10:49, you can start sending me your full name and your email address. So I will start collecting it from now onwards. So I'm ignoring the previous one because I need to we were listening to the record, like session. So please start sending your full name and address at one time, because it will might be confusing if you send one by one. So send your two pieces of information at one time, your full name and your email address. Okay. So Kiran, we are good, right, on the August 4th transaction monitoring session. So Tim, it will give you an edge with other transaction monitoring training, where it is all like most of them are like book-based training, where you need to subscribe a training program, and then they will provide you a book or something material, they will say, and then they will tell you to schedule an exam as per your preparation. But here, your training is led by experienced trainers. Well, Kiran is already a CAM certified, and also worked as a head of department in the particular bank, in a private bank in Nepal. And I have like 13 years of practical experience. So you will learn from practical trainers here. And let me know if you have any questions. We are here till 11 o'clock, more 9 minutes. So feel free to share your queries. Thank you.
And for those who want to connect with me, so this is the LinkedIn profile. I will also put it in
Yeah,
chat box section. So
perfect.
if you have any queries, you can also discuss or contact me after the session also.
Yeah, team. And you can also review Kiran's profile in our email custodian's profile as well. And I'll stop here recording our session since we are done and we are open for any questions.